Well, here we go. Welcome, everybody, to the We Love Money podcast. I am Alex, CFP, and I am joined here by John. Say hello to everybody, John.
Hello, everybody.
Wow, John. So talkative.
Wasn't that
usual.
so nice?
That was just, it was a little much.
But I felt like the voice was very, ominous.
It was.
Yeah.
I liked it.
Delightful.
Oh my gosh, we're already getting off track. Here we go. Well, as I said, this is the We Love Money podcast where we have real conversations about investing and the psychology that goes into doing it successfully. So if you love money or you're looking to learn about money so you can love it more, you are in the right spot. And without further ado, here we go. All right, so we are going to first and foremost do a little introduction about what the podcast is about, a little introduction about who we are, and then we will hit a couple talking points once we get through that. But first and foremost, I want to introduce the podcast. I am joined here, like I said before, by my colleague here, John, my best friend of, how long has it been, John?
Why is it so hard to remember every time?
Let's
just
say
third grade. So 34 years. We'll just call it 34 years.
34 years. There you go. So I am joined here by John. And what are we doing here? Can you expect from this podcast when you are joining us every single week? Well, what we are doing here is we are looking to facilitate some regular, unfiltered, unrehearsed conversation between a financial professional, a certified financial planner, which is me, and a non-certified financial planner, which is John.
The complete opposite.
Well, no, I would not go that far. But we will call you an investing enthusiast. How's that sound?
I like that. That sounds like a good title.
That's what we're going to call John the investing enthusiast. So we are going to facilitate raw and unrehearsed conversation between us. And really the goal, what we're looking to do is have conversations about pertinent things that are happening in your lives and have real conversations about it between somebody who does this for a living and somebody who is very passionate about this, is what we'll say.
I like that. That's nice.
You are passionate about it.
I am very passionate.
You love it. So at the end of the day, I think that the goal is to have some real conversations, like I said, and really kind of make it some information that's going to be useful to you guys, hopefully answer a lot of questions that you all out there might have, and really, again, make it as valuable to the everyday person as possible. So we're going to keep it simple. We're going to keep it relevant. And
most importantly, keep it fun.
That is the main goal, right? Because finance can be boring, and we don't want it to be boring. We want it to be engaging. We want to, again, have fun while we do this. So that's why I brought John here, because he's the fun one. He obviously has nothing to contribute.
No. I think now you're overstepping. I think you're also pretty fun. But,
as I'm about to trash him, he's throwing this incredible compliment out to me. So anyway,
I have a retraction ready to go.
No. All right. So anyway, that's what we're doing here. That's the podcast. So who are we? I am Alex Fernandez, certified financial planner, CFP for short. So essentially that means that when it comes to financial planning, I know as much as you probably can know, at least from a credential standpoint. Obviously, I'm early on in my career, so there's a lot still left to learn. But having said that, again, in terms of credentials and qualifications and financial planning, certified financial planner is the best of the best as it stands right now. So that is who I am. Like I said, I've been a financial advisor for going on 6 years. Before that, I did a little bit of day trading. So for all you day traders out there, been there, done that, and got the gray hairs to prove it. So we don't do that anymore. We take it a little more seriously, and that's why we're here, looking to be helpful and teach you all as much as we can about finance. So that's me. So let's turn it over to John.
I'm John. I'm a investing enthusiast. Is that what you gave me? Is that the title?
That's it.
I came in a hotel background in hospitality, and but on the side in the last 5 or 6 years, I would say, have been investing, and that I caught the bug really early, and now here we are. It's kind of crazy how time flies.
Yep, and you've been with me this entire journey pretty much. Even with my day trading days, you were pretty much there.
Oh, we did the options. I remember. I've got the gray hairs too.
Yep.
Not as much as you, but.
So we're not talking about options here today.
No,
so
definitely not.
No one get excited about that.
Do not get excited about that.
But John, yes, John is in my opinion, the perfect person to represent you all because obviously, like I said, we've known each other for a long time, but what makes him qualified for you all is that he is incredibly passionate about investing. So pretty much as long as I've been doing this, he has been right by my side. And as I've gone along the way, he has been committed to learning, committed to bettering himself as an investor. And honestly, he practices what I preach even more than I do. How many times have...
I mean, you should take your own advice, brother. That's all I would say.
He's making my point for me. So he is... On top of that, incredibly disciplined. His mom and dad raised him to be that way. He's a very diligent saver. So I think John will have a lot of very, very unique and awesome perspective for you all out there because, again, you're not going to have questions, I'm sure, about earnings per share and really, really technical things when it comes to investing. You're going to have everyday questions. And I think that John will be the perfect person to represent you all in that manner. And I hope I didn't hype you up too much, John. No pressure.
Oh, you did. Thank you. The air has definitely gone to my head, so thank you for that.
Also very successful in your investing career thus far, I have to say.
I would have to say yes. It's definitely been a learning curve. Always something to learn. Always something going on that's different, and you think it's the same, and it's not. But I've been very blessed, yes.
Yep. So again, we're going to try to translate as much as what we can from what we picked up along the way and that we are picking up as we go and translate that over to you all. So kind of a little bit about us. Like I said, we've been known each other for a very, very long time. John is my best friend. I would say he's pretty much my brother is how I would...
Family.
I would more accurately describe him as my brother. So if you notice a little bit of repartee, we will call it,
Ooh.
Dude,
that was nice.
No, that was not that nice. It's because we know each other.
Repartee.
All right, so let's get started here. Let's go ahead and get rolling because we are already getting off topic and going down the rabbit hole. So what we're going to do is the way the podcast is going to be structured is that we are going to have 3 topics every single week. I am not going to let John know what those topics are. So I will be responsible for coming up with the topics and leading the conversation. And my goal is to get John basically thinking out loud because John loves to talk about this. And he has, again, we've had countless, really, really awesome conversations that I thought would be beneficial for other people out there. The stuff that he's learning, we're going to kind of share that with you. So my goal is to get John talking and to really have a lot of the valuable things come out of his mouth. Having said that, I am a certified financial planner. So if I have valuable things to contribute, I will make sure I obviously do that.
No, that's not the objective. The objective is to get me talking. You have to just sit there and take it.
It's all about John. So yes, we are going to have 3 topics every single week. John's not going to know what they are, and it is my job to make sure that we have something here to talk about. And John basically whiffs on the topics that I come up with.
How dare you?
So
I already set me up for failure.
No pressure once again, John. So we're going to go ahead and jump into our first topic because we've been rambling on so far already with what we've talked about. We're going to cover 2 topics this week. So the first topic was kind of our introduction there, and we're going to slide into 2 topics, but I have got 2 doozies for you this week, John. Are you ready for this?
No. But yes, let's go.
All right. What I want to talk about first is an introduction to the psychology of investing. So on this podcast, and really with a lot of the stuff that I'm doing with alternative finance, investing psychology is going to be at the core of it. So I want to get your thoughts and what you have to say about the psychology of investing. And I'm going to give you a couple words, a couple things that kind of nudge you off in the right direction.
Okay.
And that is, as it pertains to psychology of investing, emotion, right? So fear and greed, and then bias. So again, I think that a lot of times fear and greed and those emotions can really play a heavy factor in your investing journey, as well as biases, whether it's what we want to believe will happen. So I'm going to shut up right there and talk to me about the psychology of investing. How has that been for you thus far?
I mean, that has been a journey. First of all, that was a great topic. But that has been a journey and part of the learning curve that I just talked about a few minutes ago is the emotional component. Much like anything, whether it's sports, whether it's everyday life, it is all comes down to the emotion of it and how you handle it. I can't tell you the amount of times where I've let fear dictate my behavior.
Yep.
And you cannot allow that. And I encompass all of it. Fear, greed, bias, all of that is in the same kind of component of allowing the emotion to dictate your behavior.
So let's stick with fear for a second.
So fear to start.
So you say fear, like fear of what? Like what
Fear
are you afraid of?
Losing your money, fear of what's happening in the economy, fear of your family. Fear is a relative term. Fear is very dependent on what you as a person fear.
What about fear of missing out?
Fear, the FOMO. Oh, yes. Well, FOMO is definitely a very big contributing factor because, again, when you're looking at anything in the market, if you see something and it's on a rocket, let's say the news, the press, your friends, the ticker symbol on Yahoo Finance or whatever you're utilizing is just rocketing to the moon and you have not touched anything, you've never invested, all this hype is there, or you haven't invested and you haven't moved into that avenue, and oh my goodness, I need to jump on this train right now. And I can't tell you, I have been that person who has definitely done that.
And with media these days, it makes it really difficult, right? Because you mentioned that a little bit, and that is, in my opinion, a huge part of that is that everything's at your fingertips. So again, so good, it's right there. Bad, it's right there. Everyone's talking about it. Mom, dad, grandma, your aunts and uncles, your friends, everyone's talking about these things, whether it's good or bad, because of the media. Yep. So I mean,
it's definitely the driving force. And again, it's a blessing and a curse. Mostly a curse, in my opinion, because it can definitely be misleading, and it can definitely increase the not so much the FOMO component, but the fear component of, you know, information not being fully complete based on what you're watching, which again, it's so important to look at it from a narrow perspective of what exactly is going on with this particular company or this particular, like, why is it happening? Ask the right questions. Where does it stand? How does the chart look? What's the market cap? What's the news on the company? What's been happening? How's the earnings been?
See, and
versus the media of kind of just the very small, you know, I was listening to a podcast the other day, and the individual was talking about how important it is to stay focused on the very important stuff and not hold on to the noise.
Absolutely.
And the noise is a lot of that media where it's just very political, very driven, very biased, very feared, very FOMO.
Yep.
It's just versus looking at it from a very narrow point of view.
100%. And I think that it's a really interesting point you make right there, because when something's happening live, whether an investment's going up or an investment's going down, and you're feeling that fear, right? When it's going up, that fear of like, oh, I don't want to miss out. Or that when it's going down, that fear of like, oh my gosh, like what if it keeps, when you're going through that, right? Everybody has a different threshold for their capacity to withstand the fear or the greed, right? And as these days tick on, the reality is I feel like a lot of people get sucked into that fear and that emotion, and it just like it amplifies and it amplifies and it amplifies when the reality is that time is so valuable to do exactly what you're saying, which is keep your feet grounded, research, plan. Again, if it's affecting your individual plan, talk to your financial people. Put a plan together. Like, this is the time where you should be doing that instead of be strapped into the market and watching every day it go. Again, we'll go to the downside, it going down and you're stressed, and it goes down again. You're like, oh my God, I should have done that. It goes down again and you're like, oh my gosh. And then people are just like falling off the ship every day as that goes by, as their threshold gets met. And again, when the reality is, instead of getting sucked in all that, those are really great times to get with your people, think, do your research. Is this a buying opportunity? Can this get worse? What's the ramifications of this? And really kind of focus on those types of things. So I think that's a great point.
And again, especially, look, we are all people. We work so hard on our jobs, investments, all of it. Everything that we do as a source of income to ourselves, for whatever reason, whatever your purpose, whatever your mission is important. We work very hard for it.
100%.
So treat that the same way and not be emotional, or at least try to mitigate the emotion as much as possible, because it is your hard-earned money, and you want to take care of it. You want to nourish it. You want to watch it grow, just like having a family.
Yep. And I think that it gets really difficult there, right?
Because money is a sensitive subject.
And like you just said, I mean, I think that people are putting their blood, sweat, and tears into their jobs and earning this money, and then they're delving into it, dipping their feet into the investing world, and they aren't comfortable with it at all. So that decision to make that leap and put this hard-earned money that they don't have very much of into an investment, and then being punished for that. I mean, realistically, like, it hurts. Like,
it hurts.
It's not like, I'm not saying like, oh, like I'm like it literally is like you can't sleep. Like it makes you sick. Like it literally
knots in your stomach.
Your feelings are hurt by the market. And that's a really weird thing to conceptualize and say, but it's the reality of the situation is that when you make that decision and it's super difficult, and then you just trust yourself and you do it, and then it just, again, you get punished for that. That's a very difficult thing to endure.
It's a tough pill to swallow
as a human being. We're all human beings, and the nature of psychology, which is why I think it's so intriguing when it comes to investing, is because we're all the same, right? We're all, when you look at it, we're all going to have the same types of things going through our head, but we feel so isolated, and that makes it get so loud in our heads, which really disrupts our decision making. But we all are going through it together.
And that's, to that point, because we're all going through it together, and that's something everyone has to remind themselves, is that there's more people investing than you realize, and you're not alone. And when you see those bloodbath days, it's not just you, even though it feels like it's just you. And I pair that a little bit with kind of what we've discussed a lot, is that it's just never talked about. Nobody talks about it. So everyone's feeling super reclusive about it, and they're mentally handling it all on their own. And there's no outlet. So, you know, again, to wrap up emotions, I hope that is something that we can help everyone with, is because, again, when we were starting out, thankfully we had each other to bounce ideas and talk things through, but it should be more of a open community for many people who are doing it.
And that's a great segue, I think, into the second thing that I kind of mentioned to you, and we'll kind of touch on it really quickly because we already talked a little bit here. But that's the bias, right? And I think that's where the bias kind of comes in, is because nobody sits around the kitchen table and is like, hey, what are you investing in today? Oh, what are you doing with these stocks? Hey, grandma, no one has those conversations. Hey, friend down the street, hey, neighbor, we should be having those conversations. We should be talking about that stuff. Again, obviously it's our money, so it's a little bit personal, and we don't need to tell each other how much money we have. But strategies and what are we doing? What do you think? And getting each other's opinions would be so crucially, and it would be so helpful to do that, because it would help us overcome bias, because as those emotions take hold in our heads, biases are going to form. We're going to believe what we want to believe, and without that conversation, there's nothing to stop you from believing it.
Right. You could basically say the world is flat, and without having a discussion about it, no matter what anyone else says, you believe that is the case. And no one's going to steer you wrong unless people are talking about it.
And for anybody who's seen the movie Inside Out, we're big Disney nerds here, so brace yourselves for that. But anybody who's seen Inside Out, it goes exactly like that, is that like those emotions in your head will actually convince you the reality is what you want it to be, what you need it to be, in order to protect your psyche and protect yourself from being hurt, like we were talking about earlier, by the market. But absolutely, there is so many times, and I've felt it, and I'm sure you felt it, everyone's felt it out there, is that bias. And if we're being honest with ourselves, that sometimes we make a plan, and even when things are not going to the way we planned, instead of like listening to ourselves and abandoning ship early on when we see things not going the way we want them to, we allow that bias to like root ourselves and say, no, this is going to go the way I think it is. This is the way. And I think that happens a lot with people.
It definitely happens a lot. I agree 100%.
So anyway, we can move on from this topic. That was a good, solid conversation about the intro to psychology. So just so you all know out there, we will definitely be covering psychology on this channel a lot, because that's really the big thing I think that we can all help each other with. This is a group thing. We are all in this together. And as John said earlier, when one of us is going through it, pretty much it's pretty likely that we're all going through it together. So we're here to talk about these things, be open about them, and mainly let you all know you are not alone out there.
Definitely not.
We are all...
And we welcome it.
Again, it's okay to be afraid. Again, it makes sense to be afraid at times. It makes sense to want to chase things at times. Just make sure having a conversation about it and thinking it through, and that's why we're here, is to have those conversations. So moving on to our final topic of the day, I am going to lob ourselves up something that we got to talk about on this channel for our very first episode. That is the state of the economy currently.
Oh, man. Well, you should lead with this one, bro.
Which is the potential for recession. So let's talk about that right there. So I don't know if you have any feelings. I know, again, like for the everyday person, the idea of trying to wrap your mind around like what does a recession mean, that's pretty difficult to do. So I would love to get your opinion or what your thoughts are on the whole, are we going to recession? What does that mean for you?
Personally, I don't know if we can really... I personally don't think this is recession setup right now.
What do you mean by that?
It doesn't look like it's going to be a recession. I definitely think we're going to expect more pullback, but I don't foresee it to be something like 2008 or 1980.
So are you talking strictly from a market standpoint or like an economy standpoint? Economy standpoint.
Mm-hmm.
Okay, so you're saying that you think basically the average household it won't be as bad as the fear mongering, we'll call it that.
I think there's definitely point and note for concern and preparation, but it doesn't feel like it's going to, as an overall economy, be as heavy as the world is anticipating. I do think that there's a lot going on, and I do think we're expecting to see pullback. We're going to see rise in costs, but I'd like to believe, or at least from what I'm seeing, it's going to be in a healthy way long term.
Yep.
That's my overall.
So it's super interesting to hear you too, because we haven't talked about that.
We haven't talked about it.
Yeah, and this is super interesting to hear you, because again, so for me, just so you all can get my perspective as the CFP and the professional side of things, is we talked about this before, that I've had all the optimism pretty much beat out of me. I used to be a bull. I like to think I'm still a bull, but I told you the other day, I'm definitely a bear. Like at this point in my life, I am just so cautious and so pessimistic and so concerned about everything, because I feel like that's what my job has like made me do. It is to be the one that's concerned for the clients so that they can not be concerned. I'll do the worrying. I'll make sure they're ready for the worst case scenario, and that's how I choose to operate, right? So it's super interesting to hear you say that, because I think that what you just said is the way a lot of people probably feel. And if I take the professional side of my life away, I probably could see myself feeling the exact same way, right? But the reality is, for me, on my side of the table, is that I've been like glued to CNBC the last few weeks, like just glued to it. And while what that creates is a lot of noise, and I know a lot of people out there are probably watching TV too, and there's a lot of noise. I definitely want to be clear, there is a lot of noise there, but a lot of that noise is definitely concerning. There are definitely things to me that are very concerning, that to sit there and the possibility of them unfolding, what it kind of creates is a situation where I don't know what would happen if some of these risks actually unfold. And what I mean by that is that you and I, the last real recession that we've had in this country was 2008.
Yeah.
Right.
And prior to that was
you and I were in high school.
Yeah. At
that time. So a recession didn't mean anything to you and I. Right?
For sure.
We don't really understand the impacts. Like our parents can probably speak better to that. But realistically, we don't have any real perspective for that recession right there. So what I mean by that is that, I'm going to talk worst case scenario potential here. The worst case scenario potential is absolutely something like an economic depression, dude. Like not like a recession, like a depression, like where costs go up, prices go up, interest rates go up, people can't afford stuff. They basically cutting back spending to offset that. Companies let people go. They release people. Now there's not nearly as much hiring because that's kind of the shift that these corporations are making. And if that starts to happen, the dollar starts devaluing. If there's some wonky stuff going on with interest rates because there's a lot of selling in bonds, which could push yields higher. And if people start to lose confidence in general with the U.S. is like the strength of the dollar and it's like safe harbor like aspect, and all these kind of perfect storms kind of start coming together. Because again, on top of that, like with the whole tariff thing, really what the goal is to get money from these companies poured into infrastructure, into building out in the U.S. so that they can...
So that we can more in-source everything.
Exactly. But if they got to eat all those costs, you know as well as I do, shareholders demand results.
Yep.
So if they're going to put money into that, where are they going to make it up? Letting people go. It's a really easy way to make it up.
Yep.
And and that could create a market downturn. That could cause households to be hurting. That could cause households to be hurting. It could cause a lot of things. So I did a lot of fear mongering myself here. I'm looking at your eyes and I feel like you're like, oh my gosh, this guy is.
No, I mean, again,
but my point is that I feel like a lot of people, I guess what I'm trying to say is all this is like a worst case scenario. But what I'm trying to say is that if you've never lived something, it's hard to imagine the possibility of what it could mean and what would happen if it happened. And that's kind of the circumstance I feel like you and I are in. And especially if we're going through a depression, really not even just you and I, our parents have never experienced anything like that. The last depression we went
29.
through, you got it, was a long, long time ago. So if that's really the reality of what we could be headed to now, a lot of things could stave that off really quickly, like walking back tariffs, all that kind of stuff. But if that's really what's happening, I don't think anybody is really
mentally prepared
for
that.
what is going to happen. And I'm definitely in that boat. I don't know exactly all the ripple effects that would come off of something like that.
Wow. Well, you definitely put the fear of, I'm just kidding. No. But yeah, and that is a very kind of segue back into not just emotion, but again, facts and just seeing where everything is, which is why it's so important to stay current, but also, look at everything from multiple angles.
Yep.
Not just from one platform.
Yep. And bringing it home, like I said, I think that's where it's like focus on the planning, right? Market drops, Trump announced tariffs, market drops, people kind of get worried. Market drops, people are starting to panic. Market drops, people are freaking out at this point. That is where instead of getting sucked into that, okay, is there a potential long-term ramifications from this, which I just sat there and gave you the worst case scenario, which is pretty doom and gloom, right? And if we sit there and have this conversation and that is something that you feel is an actual possibility, then instead of like knee-jerking and panicking, how can I position my portfolio
Get ahead
or
of
something like that? Like, I know there's things I don't know, but what's the best I can do based off of what I think might happen? I don't want to completely like put all my eggs in one basket and like, but I want to like do something in case that risk starts to actually look like it's real, right? Planning. That's what I would be encouraging people to focus on, right? So yeah, so again, there's a lot of things, a lot of moving pieces. Honestly, interest rates, the whole interest rate scenario has got me more concerned than the stock market at this point, because that's going to really, but because again, I think people, a lot of young people out there, especially when you talk about like housing market and interest rates need to come down.
Oh, I think the younger generation, there is no housing market. It's getting next to impossible.
Yep. I saw a stat. I think
for so many people to get a home.
I think I screenshotted it actually. Let me see if I can pull this up real quick on CNBC this morning. Yes. Home sales last month dropped to their slowest March pace since 2009. I think home sales have kind of started been dropping off. I think you're starting to see, like I said, The question becomes, how over leveraged are people out there? That's a question I don't know the answer to. Are people carrying a lot of debt? Are they?
I think the debt's high because the national average for debt is higher than it's ever been.
See, again, those are the types of things where if these things have the potential to come to pass, where I would be encouraging people to speak to their financial planners and just not panic. You do not need to panic, but have these conversations. Look at your financial planner and say, what if this does happen? Because I'm going to hold you responsible for it. Mm-hmm. Right? That might be a little hard.
So Alex, what do you think is going to happen?
But that's why I hear stories all the time of people saying, I went to my financial planner and they told me not to do this. I can't stand that, man. Again, at the end of the day, like if a client comes to me and says, I'm scared about this, I'm going to make adjustments for them.
Right.
I'm not going to let them just like completely like derail their portfolio. But at the same time, we're going to make adjustments because at the end, I'm never going to be that person that tells them I know what's going to happen. So, and that's where, again, you go back to the bearish side of me. I'm always being that pessimist at this point. And I feel like I kind of need to be. I feel like that's kind of like my job is to basically be like,
assume the worst, hope for the best.
These are the risks. This is what could happen. I shall make sure you know that. So when you're making your decisions, you got the whole picture in front of you, right? So if we are headed into a recession or economic slowed growth, one thing I want to point out to everybody that the most important thing is, first of all, if you do have debt out there, I would definitely that's where my attention will be set, is making sure if there's ways to get rid of that, especially if it's high interest debt like credit cards, things that are paying.
I think that should also just be the topic of focus, even if we're not heading that way.
Is to get rid of debt.
Debt is it's a blessing and a curse for certain things, but if you are carrying an interest, knock out the debt.
Especially if
it's
it's
overpaying for what you paid for something.
Especially if it's higher than like 6 or 7%.
100%. Knock out the higher interest. Actually, there's kind of multiple topics of that. Some people believe taking out multiple lower interest versus the high. I always think take out the higher interest and just knock that first.
Again, this will be a whole another topic.
That's a whole
conversation because more importantly, like
take out your debt.
I think taking out your debt right now, definitely, if we are heading into a time of economic, slowing, we'll call it, then absolutely taking down debt, which kind of segues me into the second point there, which is the most important thing in that circumstance is going to become your cash flow. Do you bring in more money into the house than goes out? Mm-hmm. If the answer to that question is yes, theoretically, you should be able to withstand a recession, assuming your job is safe. Now, think about it, identify your situation, and if you are in a cash flow positive situation, meaning you're saving money, or you can save money, that is the most important thing. And taking out the debt is a huge component of that, because if you're carrying debt, likely you're making a monthly payment towards that debt in some capacity, and removing that debt will help your cash flow. So if things are going to get tough, cash flow is the most important thing. I know everyone says cash is king. I say cash flow is king in this circumstance. So that's my general advice to everybody out there. If anybody has questions about it, you know where to find us. And I think we're up against time here. Johns, do you have any final thoughts for everybody on the economy, on what's going on any words of wisdom for the people?
Don't panic. Stay the course. Breathe. Please do. And diversify.
Wow. That is incredible
advice.
How
deep is that?
That is incredible advice.
Again, I think the biggest takeaway is kind of what we discussed. In all honesty, is just the emotion of it. Just do your best to absorb the information, good information, multiple sources, and stay calm. Because the moment you panic and the moment you make impulsive decisions, especially with something like your money, which again we discussed, we all work very hard to get, bad things can happen.
Yep.
So just take your time. Speak to your advisors, speak to your friends, speak to your family, and don't let the emotion win. You make the money. Don't let the money make you.
Beautiful, dude. There's John Jessel, not CFP, everybody. Hey, dude, as the CFP of the group, I second everything you said right there. I mean, I think at the end of the day, when we make decisions based off emotion, like we said before, the market can literally hurt you. It hurts your feelings when things like this happen. When you make decisions, active decisions that contribute to the loss and to the damage, that hurts even more. And you're stacking this pain on top of itself. So if you're going to make decisions, make sure they are thought out at the beginning when you're making them initially. If things change, all the way through. Make sure you're thinking it through, planning, and not making knee-jerk reactions. Again, you can make decisions quickly. You don't need to take weeks and weeks and weeks to make a decision. But if you're going to make a quick decision, make sure you at least have had the ample conversation about it and consulted the people you need to consult. And I think everything else you said was beautiful, bro.
I think you said it better.
Well, everybody, thank you for joining us. We went a little overtime this time. We'll try to keep it closer to 30 minutes for you all in the future. But if you all...
I can't promise that. Sorry.
I mean, dude, we talk a lot. It is what it is.
I mean, I think I think they'll tune in for all of it.
You think they like that?
I think they like the banter.
Just wait till they see John's beautiful face when we get him on camera.
No, we're not doing that.
No,
I will remain a mystery.
John wants his beautiful face on camera. Let's be honest. Anyway, that is the We Love Money podcast, everybody. We will be doing this every single week. So if you enjoyed it, feel free to give us a follow so you can be informed when those go up. We got a YouTube channel for my business, Alternative Finance, where we're doing a lot of educational stuff there as well. So if you want info on that, go feel free to search Finance AF on YouTube. We got social media. Again, I'll get better at this whole call to action type of thing at the end, but any other final words for us?
No.
Make it quick.
Thank you all for tuning in. And remember, no question is a dumb question. No silly questions. Chances are, if you have the question, more people have that question than you think.
God, John, I said quickly.
That was quick.
Thank you all for joining us. That is the We Love Money podcast. And until next time, that's Finance AF, everybody.
Take care.